Silver. For the Romans, it wasn't just a metal, it was the very backbone of their empire's power. But here's the twist. Emperors weren't hoarding silver for the reasons most people think. The secret strategy behind their obsession holds a surprising lesson that still applies to modern investing and wealth building today. I'm Simon, and in this story, we'll uncover why emperors filled their treasuries with mountains of silver, why they guarded it more fiercely than gold, and what this ancient practice can teach us about protecting and multiplying wealth in uncertain times. Imagine walking into the Roman Forum. Senators argue politics, merchants haggle over goods, soldiers march in formation. But beneath all the noise, there's something invisible yet essential holding everything together. Trust in silver. Unlike gold, which symbolized divine wealth and luxury, silver was the lifeblood of daily transactions. It was the engine of Rome's economy, the coin in every soldier's hand, and the promise behind every contract. Now here's the unexpected twist. Emperors didn't hoard silver just to flaunt riches. They hoarded it to control time, stability, and credibility. Silver was liquidity. It was movement. A reserve of silver meant the empire could pay its armies instantly, fund grain shipments in emergencies, and seize opportunities before rivals even had time to react. Think about that in modern terms. Businesses today with large cash reserves don't hold it because cash is exciting. They hold it because it buys time, credibility, and resilience. The Romans understood this centuries earlier. But there's another layer. Silver wasn't just hoarded, it was actively managed. Emperors controlled the purity of silver coins. By adjusting the ratio of silver to base metals, they could stretch their reserves further or tighten the economy's stability. When confidence was high, they issued pure silver denarii. When crises loomed, they debased coins, making them worth less in metal but still powerful in circulation. At first glance, this might seem like manipulation, but here's the real secret. It was strategy. Emperors used silver not only as money, but as a psychological tool. Citizens trusted coins because they could see and feel the metal's weight. Trust fueled trade, trade fueled taxes, and taxes fueled empire. Now ask yourself, why silver, not gold? The answer reveals a profound wealth lesson. Gold was too scarce, too concentrated in the hands of elites. Silver was abundant enough to circulate widely, yet valuable enough to inspire confidence. That balance made it the perfect asset for empire building. And here's where it gets interesting for us today. Modern investors often chase flashy assets, stocks with hype, trends with buzz. But Rome's emperors remind us, wealth that endures is built on assets with credibility, liquidity, and resilience. Silver wasn't glamorous, it was useful, and usefulness creates lasting power. But wait, there's one more twist. Emperors who hoarded silver successfully didn't just lock it away. They used it to buy influence. Soldiers were loyal not because of speeches, but because they were paid, on time, in silver. Merchants supported emperors who could guarantee contracts with hard currency. Trust flowed to whoever held and deployed silver with consistency. So, what's the timeless principle buried in Rome's obsession with silver? It's not about stacking precious metals, it's about mastering liquidity, credibility, and timing. Silver wasn't Rome's treasure, it was Rome's lever. And when you know how to use a lever, you move the world. But here's the real question. What happened when emperors forgot this principle? When they abused silver, devalued trust, and turned short-term gain into long-term collapse. You won't believe how fast the empire's fortunes changed, and why that lesson is even more urgent for us today. When emperors lost discipline, the silver they hoarded turned from a weapon into a weakness. Take the 3rd century, when Rome's costs exploded. Endless wars, political chaos, and corrupt officials drained the treasury. Instead of holding firm to credibility, emperors began aggressively debasing silver coins. What once carried the reassuring shine of solid denarii became thin, light, and mixed with cheap alloys. Citizens noticed. Merchants demanded more coins for the same goods. Soldiers grew restless as their pay lost value. Trust evaporated, and with it, Rome's economic backbone. Here's the timeless truth. Wealth collapses when credibility is broken. The Romans learned the hard way that you cannot fool people with appearances forever. The moment silver stopped being trusted, the empire's ability to pay, trade, and govern cracked. It wasn't just an economic failure, it was a psychological one. Modern parallels are striking. When companies overpromise and underdeliver, when currencies inflate beyond recognition, when leaders treat credibility lightly, collapse follows. Silver reminds us that the foundation of any economy or business isn't glamour, it's trust. But here's the deeper insight. The emperors who succeeded treated silver as a cycle, not a stockpile. Hoarding gave them stability, but the real power came from how quickly they could deploy silver and recycle it into influence. Pay soldiers on time, they fight with loyalty. Fund infrastructure and commerce flows back as taxes. Support grain shipments, and citizens stay calm instead of rioting. Each coin that returned stronger created compounding influence. That's the same principle today's investors and entrepreneurs use when they think in terms of velocity instead of volume. A pile of cash sitting idle looks impressive, but capital in motion, well deployed and recycled, creates empires. Another overlooked lesson is psychological framing. By visibly hoarding silver, emperors sent a clear message. The empire is secure. The sight of vast reserves reassured citizens and intimidated rivals. Sometimes perception creates reality. If people believe the treasury is strong, they behave as if it is. And that belief itself reinforces stability. So, what's the takeaway for us? Don't just focus on the size of your assets. Focus on credibility, liquidity, and velocity. Protect the purity of your wealth, whether that means cash, reputation, or business equity. Use it strategically to buy time, loyalty, and influence. And never forget that perception is power. I'm Simon, and if the Romans taught us anything, it's this. Silver was never about the shine. It was about trust, timing, and disciplined strategy. Ask yourself, what's your silver? What resource do you hold that buys you time, earns you credibility, and multiplies when you put it in motion? Answer that honestly, and you'll have unlocked the very same lever that built one of history's greatest empires, and the same one that, when neglected, helped bring it crashing down.